What if I told you that a small change in how you use this could be the difference between a profitable scalper and a losing trader? I tested this 1-minute system on a 100 trades, not on a select few, not on historical charts that only show successes. Before we look at the 100 trade back test, let's first see what exactly this system is made of. In this test, I use the EMA Ribbon with settings of 9, 21, 34, and 50. But the important thing is that in this strategy, our goal is not just to see the EMA crosses. Most traders enter a trade quickly when a fast EMA crosses a slower EMA. But on the 1-minute time frame, this method usually results in late entries because much of the movement may have already happened. What is more important is the behavior of the ribbon itself. When the EMAs are close together, the market is usually in a state of compression. This phase can indicate that energy is gathering before a larger move. But when the fast EMAs start to separate from the slower EMAs, meaning the distance between them increases, this expansion can be a sign of increasing momentum. In fact, instead of just looking for a cross, we are looking for a change in market behavior. But during a pullback, we can also use the EMA itself to re-enter or confirm more. That is EMA 9, which when it pulls back can confirm, go back up and confirm and enter. Let's say it like this now. And the RSI is not special either. It shows the momentum of the price with a cross and shows the red and green areas with a cross confirmation and price confirmation. Examples of the positions I tested in this back test. In the first trades, what quickly became clear was that not all EMA ribbon signals are of equal value. Some of the entries occurred precisely when the EMAs were out of compression and the gap between the averages was starting to widen. In these situations, the price action was usually stronger and the ultimate RSI was confirming the move. On the other hand, there were some trades that might have looked like attractive entries if we had only looked at the EMA crosses. The problem was that the market didn't have enough strength to continue moving. The EMAs were still close together and the price was more fluctuating than actually moving. This was one of the most important points that became clear in this back test. The main problem with this strategy is not finding signals. The problem is recognizing when the market is really ready to move. During the review of 100 trades, the best performance was observed when 3 factors were present at the same time. First, the EMA ribbon was out of compression. Second, the general direction of the averages was in line with the price action. Third, the ultimate RSI confirmed the strength of the move. But when these 3 factors were not in line, the number of unsuccessful trades increased. And this is exactly where many scalpers make a mistake. Instead of waiting for a quality opportunity, they just go for more trades. Now let's see what the final result of these 100 trades showed and whether this system is really worth using for 1-minute scalping. Now let's look at some examples of positions from this backtest. What was revealed during the review of trades is that the best entries occurred when the EMA ribbon was out of compression and the gap between the EMAs started to increase. In this situation, the price action had more strength and the ultimate RSI showed better confirmation. But in some trades, only a simple EMA cross had occurred and the market still did not have enough momentum. Here we usually saw fake moves and price reversals. After examining 100 trades, it became clear that the quality of the entry conditions is much more important than the number of signals. This strategy worked best when the EMA ribbon, market structure, and RSI confirmation were all in the same direction at the same time. Now let's move on to the final result of this test. The result of this trade was profit. As the back test continued, a few more interesting things came to mind. One thing that caught my attention was that some of the best trades came right after a period of calm and tight trading. When the EMAs were moving close together and then suddenly started to open up, the next move was usually stronger. But not all trades were like this. In some positions, even with the EMA ribbon looking good, the price just couldn't keep moving. These trades usually happened when the market hadn't made a clear decision yet and had just made a short move. In this test, the goal wasn't just to count wins, it was to see why some trades worked and others didn't. As I looked at the different positions, it became clear that the best opportunities came when several small signals were coming together at the same time. Now let's look at a few more trades to see how the system reacted in different market conditions. As we continued to examine the trades, another pattern emerged. In positions with stronger momentum, there was usually a clear change in the EMA ribbon structure before the entry. That is, the faster EMAs began to move away from the slower EMAs, and the price moved more strongly in the same direction. But in some trades, the problem was not the signal itself. The problem was that the entry had occurred too early. The market was still in a phase where it could have moved up and down a few times, triggering the stop loss. One of the most important things this backtest showed was the importance of entry timing. In 1-minute scalping, even a difference of 1 or 2 candles can completely change the outcome of a trade. In some positions, the entry would have been of better quality if we had waited a little longer for the EMA ribbon to form a clearer structure. This is exactly what makes backtesting valuable, because it doesn't just tell us where to enter, it also shows us where not to rush. Now let's look at the last few trades of this test, and then we'll get to the overall result of these 100 trades. In another trade of this backtest, an interesting situation developed. Before the entry, the EMA ribbon was compressed for a while, and the averages were not far apart. After the price started moving, the faster EMAs gradually separated from the slower EMAs, and the ribbon structure began to open up. At this point, the entry was made because in addition to the EMA's changing structure, the ultimate RSI also confirmed the strength of the move. The important thing about this trade was that the entry was not based on a simple cross. We waited for the market to show that it really intends to move. This small difference can be very important in 1-minute scalping because many weak entries occur precisely when the trader enters before the move is fully confirmed. But there are a few common mistakes that can ruin the outcome of this strategy. First, entering based solely on EMA crosses without considering market conditions. Second, taking too many trades when the market is weak and lacks momentum. And third, not managing risk and expecting every trade to be a sure winner. In scalping, the quality of entry is more important than the number of trades. After reviewing these 100 trades, what became clear is that success in scalping does not depend only on having a good indicator. EMA ribbon can help us see the strength and structure of the move better, but timing the entry and waiting for the right conditions is the more important part of this system. Combining EMA ribbon with ultimate RSI can create a clear framework for finding better positions. But like any other strategy, it requires testing, risk management, and practice. If you like this type of backtesting and reviewing real strategies, subscribe to the channel. Because in the next videos, we will also test different strategies to see which systems are really worth using. If you have a specific strategy in mind, write it in the comments so that we can review it in the next videos. Good luck, and until the next video.